Good day, everyone. I am Fitzgerald C. Archaga, and today I'm gonna present to you the accounting cycle. First, what is accounting cycle? The accounting cycle is the process of accepting, recording, sorting, and crediting payments made and received within a business during a particular accounting period. So, the accounting cycle has its series of steps. So I'm gonna present to you the steps of the accounting cycle. So first is the number one, the identifying and analyzing the event recorded. So this is the process of identifying and analyzing the transactions to be recorded through the business documents. Business documents are forms containing evidence to support a business transaction. So, these documents provide the data concerning the parties involved in the transaction, the exchange made, the date, and the money value of the exchange. In determining the exchange made, the value received by the business and the value parted is translated into their debit and credit components. So let's proceed to number 2. Number 2, recording transactions in the journal. So this is known as journalizing. It is the process of the recording the transaction in the first book of accounts known as the journal. So next is the number 3, posting journal entries to the ledger. This is known as posting. It is the process of transferring the information found in the journal into the book of final entry known as a ledger. The ledger summarizes the increases or decreases of individual accounts. So, sabotable naman siya, no? So, ang first ato, ang una ato niya, ang katong number 2 is mag-record sa transaction sa journal. Then, ang mga una nga transaction, then i-summarize siya, then ibutang siya sa ledger. So, number 4, preparing the trial balance. The trial balance is a list of accounts found in the ledger together with the account balance or total. This is proof that for every debit, there is a corresponding credit. Hence, it also proves that ledger is a balance. So next is number 5, preparing the worksheet and adjusting entries. So a worksheet is a common tool used by accountants to assemble on a sheet of paper all the information needed to prepare the financial statements, adjusting entries, closing entries, and the post-closing trial balance. And the next one is number 6, the preparing financial statements. A statement of financial positions, income statement, statement of changes in owner's equity, and a statements of cash flows are prepared to provide useful information to parties interested in the financial information in the business. So next is the number 7, the journalizing and posting of adjusting journal entries. Adjusting entries are prepared at the end of the accounting period to update the accounts for internal transactions because they affect more than one accounting period. This will record the actuals, expiration of deferrals, estimation, and other events from the worksheet. And next is the number 8, the journalizing and posting of closing journal entries. So closing entries are prepared at the end of the accounting period to update the owner's capital account. This will also eliminate the balances of the normal accounts so that they may be ready for the next period. So next is the number 9, the preparing the post-closing trial balance. After the closing entries have been posted, The post-closing trial balance is prepared from the general ledger accounts. This is necessary to assure that these entries have been correctly posted. This will also check the quality of the debits and credits after the closing entries. Number 10, the last one, is the journalizing and posting of reversing journal entries. Reversing entries are prepared to simplify the accounting process. The adjusting entries are simply reversed on the first day of the accounting period. Not all adjusting entries are reversed, only accruals and deferrals that use the nominal accounts. And so that's it. That is the accounting cycle. So that's all. Thank you for listening. Have a good day ahead.